Okay, good afternoon, everybody. Welcome to the weekly Take on the Market. Today is Friday, December 15th. I will be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group. Here is our disclaimer. Please take a moment to read this. I'm not licensed. I can't tell you what to buy, sell, hold, whether to hold a stock through the dividend, et cetera, et cetera. I do have skin in the game. Very, very active. Love the markets. Love hate relationship for sure. But I love the intellectual curiosity of trying to figure out this big game. So I am definitely in there with you, but I can't tell you, what to do, how to handle a stock, how many shares to have, et cetera, et cetera. I do like to be fully uh, like to give full disclosure. So I will tell you exactly what I'm doing, and it is what it is. Handle that however you would. So we'll do market thoughts. It's about a quarter to one. This video will be shorter than normal. I have an appointment, so I have to get it going here. I doubt anything drastic is going to change in the next 15 minutes, considering the big move the market's made, obviously. So we'll do market thoughts. I'm going to skip the industry groups, and then I have a list of stocks that I feel like pulling up. So uh, from Haver Analytics, Rosenberg Research, investors are all in on tech and the AI trade. Uh, Net speculative position in the NASDAQ 100. I don't know exactly how this is calculated, but I love charts. They tell a great story. And it's only goes back to 2010, but you can see the huge spike. So I, look, I've said it 1,000 times. Price creates sentiment, not the other way around. So as prices go higher, people become more and more bullish, and vice versa. The stock market is the only place that I'm aware of where the higher price creates demand, and the lower price creates supply. And I am just as guilty of it as anybody. If I'm in something and it's going higher, my first instinct almost always, unless I've owned it for a while, is to buy more. I want to buy more. And if I'm in it and it's going lower, my first instinct is get out or reduce. And that's not the way the real world works. At the grocery store or any place else. If you like something, you should. If you like it at 50, you should love it at 35. And there's a reason that it works that way, is because time tested. I think you're better off in the long run buying more of what's working and selling more of what's not. But it can get crowded, and I feel like the tech trade is very, very crowded, especially the big cap tech trade. But honestly, I've thought that for a couple of years, and so this year especially kind of caught everybody off guard because most people, I would guess, not all, but most probably felt like it was a crowded trade, and I have to admit I got that totally wrong. I feel like Apple is the most crowded trade in the history of crowded trades, but the stock's done really well this year. And so Nvidia and Tesla and things like that seem crowded, Microsoft, but they've had great years. So you have to keep that in mind. This is not a great timing tool, something like this. But this market's very eerily reminiscent of the 1999 market to me, especially like the timing of the rally into end year. So I'm really, really curious how the start of next year works. Like I would love to fast forward to January 3rd if I could. I think the market's going to do nothing and for the next 10, 12 trading days, give or take. And probably a lot of the move up is been priced in as well. So um, another great chart on the lesson that the stock market is not the economy and vice versa. Maybe it is in the long run. I know a couple of people on IBD Live kind of questioned me on that, and that's fair. I don't mind being questioned. It's fine. A lot of this is just me thinking out loud, and maybe I'm a sounding board for some of you. I do get a lot of emails from people They say two things. Love the videos. I don't trade like you do. So that's fine. It's perfect. You probably should be listening to people that are not doing it like you do. I think I do. I read books on value investing a lot. I listen to podcasts on value investing. I'm not investing that way, but I want to listen to their thought process. These are smart people. They must have a reason for the way they do this, and so I'm not too egotistical that I can't at least listen. So you see a lot of talk about interest rates and the economy, and and credit cards. And I got a credit card because I wanted to create some miles because I'm going on a long trip next summer, and a lot of flying miles. And I was flabbergasted at the interest rate that they were charging me, like 21%, I think. And it's a credit card that just for the miles. But I just was like, wow, how does anybody pay, a credit card at 21%? And so I see like that, but then I look at a stock, like I'll pull it up, Capital One, which is broken out of a base and created a power from pivot flag. So it's incredible that you have these dichotomies, and that's kind of how the market works. And so it helps you to put the puzzle piece together. Uh, what are the stocks saying versus what you're reading, et cetera. And ideally, they'll come together and make sense. That's when you probably get like I don't want to say a perfect trade, but a better setup. Like Jim Rogers would say, I just wait till the money is standing. The money's just sitting over there on the floor in the corner, and I go over there and pick it up. I wish as I was as patient as Jim Rogers. Unfortunately, I'm not even close, but that's kind of his process. He just waits for the moons aligned to, and then puts the trade on. All right, so let's pull up Market Smith. And let's pull up the indexes. And I think we are, we're not at all-time highs, but we're at 52-week highs, and pretty much for the better part of it, you're making all-time highs. And remember, I talked about how, it was gonna. I didn't handle it very well. I knew that this market was going to go to all-time highs weeks ago. I said it on this video. I should have just put on a trade that replicated that and paid me if it did that. It's just stupid of me, but we're here. Very, very strong market, and it's now, like I talked about previously. Let's see if it can hold in here. I think there's potential for a tremendous opportunity here both ways. If this is the new bull market, which some people think, great, and we're going to go a lot higher, and we're going to trend for a long time. Maybe something like that, and great, we'll make a lot of money. Or you're going to get a really bad head fake in a bear market, and typically, if it's a bear market, it'll go down a lot, 20-25%. It'll go down quick, and then the next time we go up will be the all clear based on history. So as somebody who will go short, if that happens, hopefully I can make some money that way. I'd prefer it to do this. I just think it's easier to be long. There's more ideas. It's just easier. I promise you that. But I can't trade the market. I can't make it do what it doesn't want to do. I'm just going to go with it. So I would say right now, I think there's a lot of risk on both sides. I wouldn't want to be short, but I think there's a lot of risk to be, heavily long here, even though it seems like, oh, it should be full margin here. I guess a lot of it depends on the type of trader you are. But for me, it's not a great risk reward setup, so I don't have a lot. I don't have that much that is going to be influenced by the NASDAQ, so to speak. I've got some NVIDIA, pretty much that's it. All my other stuff is probably kind of trade on its own merit, versus like being heavily influenced by what the indexes are going to do. The S&P, Same thing, new highs. So it's that's I think we kind of all saw this, and hopefully you participated. Again, I didn't make as much as I should have or would have or could have or wish I had, but that's okay. I don't want to. It's really hard. Like at the end of this year, I'll go through and I'll review like all my trades. I'll review stocks that I missed, like home builders. I didn't make any money in home builders. Why? And I'll put it all together and I'll say, boy, if I had handled this year perfectly, you could have been up X amount. And then the reality is, I really want to be somewhere around 35 to 50% of that. That's so if a perfect year was 100% and I made 35 to 50%, then I actually think I did tremendous. And that's kind of the the exercise that I'll do at the end of the year. Um, it's just you're not going to get it perfect. You can't beat yourself up on that as every year. It's just you're going to have a lot of you have zero mental capital if you do that to yourself in the stock market, because there's just so much, especially if you look at a lot of stocks like subconsciously, because I'm looking at 800, 900, 1,000 stocks every weekend. Subconsciously, I will see Pulte Homes or I will see XYZ. And so later on, if let's say XYZ went up 55%, and I never even considered it, in the back of my mind, I can remember like somewhere along the line that stock came across my desk. And therefore, I'll kind of equate like that meant I should have owned it. And that's not always going to be the case, obviously. So, we have it's December 15th. I just think for me, it's a wind down. Just going to let the year play out, see what happens. And then, it's excited for January 1, January 2, January 3, I think, whatever the first day of trading will be this year. All right, let's jump to the stocks. Oh, I have the wrong date, I think. No, no, I have the right date. Oh, I know. I want to talk about it. Like I thought this was interesting with Starbucks, how it went down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I think it was 12 days in a row. So just kind of a reminder that stocks can do anything. I would guess that Starbucks probably never went down 12 days in a row and then did something it's never done. So I don't know what's going on with Starbucks. My daughter used to love Starbucks and now she's not as big a fan. So I don't know if there's been some kind of thing with the millennials that where Starbucks has changed, but it's just I found this interesting, the collapse in the number of days down for a stock like Starbucks. Lilly, I really wanted to buy this one, and I did here this day, and I kind of cheated because to me, I think the pivot is through there. So I jumped the gun a little bit, and the next day I had to stop myself out. I don't know what's going on with Lilly. The relative strength is really not acting well. So um, I think they're in the right area, but the market is voting, and the market's saying no, not right now, at least. So Nvidia acting fine. It's the best big cap out there. It's not running away, which was a little bit disconcerting to me as the market was going up. And maybe it could still turn out to be the case because it hasn't made a new high in the move like the NASDAQ has. But I don't want to read too much into it. So if you have that one, I think it's fine. Tesla. So it really, I think if Tesla's going to get going, these numbers need to improve. So you can see the short-term RS rating, the 3-month is 48, the 6-month is 41, and even on the chart, it's 80, which is pretty pedestrian, really, for a growth stock. But it is setting up, so it's interesting. You've got this double bottom pivot, and I don't know. Let's see how this one plays out as well. Apologize. I'm having a hard time kicking this cough. And the more I talk, the worse it makes it. Okay, let's jump to the home builder. So Lennar announced last night. A lot of volatility on the announcement. Uh, Incredible, the move off the lows. And this area has been really good this year. And it just goes to show you, we don't know, as much as we think we know, right? Because if you had told me mortgage rates are going to go from, 2 to 8 or 2 to 6 or whatever the number is, go ahead and put a trade on, Scott. I'd have got run over shorting home builders. So Pulte Homes, Lennar, they they look very, very extended short term. I think Mark Minervini tweeted that he was a seller of these into strength. If I was lucky enough to own them, I would definitely be selling them. But it's not really hard to know because I don't own them. Let's talk about Capital One. So power from pivot on credit card stock in the midst of delinquencies and interest rates rising. Again, another another quagmire. Is that the word? So very interesting. Now the power from pivot. I think it's a little confusing for people. Look, this is just a math. It's just for lack of a better word, it's a dumb computer algo. And we told it, let's mark the power from pivots, the 3 weeks up rule that Bill had, 20% or more. And so it's marking that. Now you have to come in and say, okay, is this something that, gosh, that I want to hold for 8 weeks or more? And it's Capital One. It's not a company I would guess that's changing the way we work, live, or play. But keep in mind that that's why that that is being marked. It's just a sign. It's telling you from a math-based standpoint, it did exactly what it said it was going to do. I find it interesting that it broke out here and didn't work, broke out here and didn't work, and this one worked really, really well. Broke out here and didn't work, broke out here and didn't work. Capital One's not really a great breakout stock, so we'll see how that plays out. I'm going to turn my camera off because I know sometimes it'll cover the charts. ESTC, one of the great names so far in the rally, acting really, really well. Datadog. I know like a lot of people were talking like they were a little disappointed that it was going sideways while the market was going up. But guess what? It's got righted the ship last couple days. Another name acting great. Salesforce, another name acting great. Little bit, like I don't think you want to use these as like a pivot because it's just a shorter term pivot. If you can't help yourself, you want to add to it. You have 1,000 shares, maybe buy 100 or something. But these aren't great pivots. They tend to shake the tree on these pivots. PDD. So another kind of quasi pivot, another name that's acted really, really well. Not there because of the whole China thing. And so that's something that I have to consider when I do my review. This is the name that I normally would have bought. So it's a little frustrating that I didn't make any money in PDD this year, but sure is acting awfully well. The tankers kind of perked up today. So Sting, I noticed, was just pushing day highs all day long. Look at the volume. And I did see on Twitter some talk about maybe the Red Sea, no shipping going through there or something like that. So I don't know if that had anything to do with this, because I did notice a lot of the shippers, TNK had a really good year, a good day, I'm sorry. And then LPG, really great bounce back off the 50-day. I really was considering the 50-day here for LPG. You can see it got right to the 10-week. The steepness of this made me a little wary, and unfortunately, I'm not in it again. Error of commission or error of omission. Had quite a few of those this year, unfortunately. Some trades that I normally would take that I just for whatever reason didn't take. Um, oh, and did I mention TNK? I think I did already, but yeah, I had a really good day on volume today as well. AMR, I did get knocked out of the box. I didn't like the action in CEIX. So I handled this really, really well. Let's review this. I bought AMR there. I bought CEIX there, I think. Somewhere in there. And then as AMR made a new high, like I think AMR made a new high on 1124. Apologies for the back and forth. Even sooner on 1122. So on 1122, AMR was making a new high, but CEIX wasn't. It was acting fine. I was up a little bit on it, but it wasn't making a new high. So I didn't feel like owning two coal stocks. So I sold CEIX. Of course, it finally made a new high. But then it broke. So my instinct based on the relative strength of the stocks was correct. This was the laggard in that group. And AMR kept going. But when CEIX broke this bad, down 8% on one day, it spooked me and I sold AMR. And then today, gosh, unbelievable. I almost bought it back today. I so desperately I was like, it's not correct buy, it's not a correct buy. I kept telling myself that. But really, really acting great. Good leader in one of the top groups. Excuse me, ServiceNow. So ServiceNow had like a really bad break yesterday, kind of out of nowhere. It righted the ship today so far. So if you're a long-term holder, I think today's action was very encouraging. There's the weekly, basically unchanged. I'm sorry, my voice is killing me. So um let's um let's jump to the quote of the week. And I've been rereading Unknown Market Wizards. And I think I used a quote from that last week as well. So I really like this quote from John Netto in Unknown Market Wizards. Emotions are your friend, not your enemy. The human emotions that we feel can be used as a signal source. Part of my training process, ask myself where I am. And I apologize. I would have probably redone this video if I had time. Man, this cough is killing me. Am I highly afraid or am I highly greedy? I couldn't agree more with this. A lot of times people say you can't be emotional about the market, and they're right, but it's impossible to turn off, I think. So a lot of times I like to use my own emotions as a signal, just like John says here. So um, I remember what happened on Sunday night, I believe. Gold was ripping after hours in the futures market, and I didn't have a position in gold, and I have tried gold a number of times in the last 10, 12 years, numerous times. And so I didn't have a position in it, and I was like really like upset. I don't know if upset's the right word, but I felt like this FOMO that I should be there selling into this. And I found myself wanting to buy it. And I recognized that emotion that, I was that FOMO that, Scott, you wouldn't be buying it here if you owned it. You'd be selling it. You'd be taking profits into this unusual move in a short period of time. And it turned out to be a great sell. Now I didn't sell it short or anything like that, but it would have been a fantastic sell. I think gold's probably like about 5% off that high or something like that, which is a lot in the futures market. So, use your emotions, recognize when you're greedy, when you're fearful. In this market right now, it feels like you should be loaded up, full margin, pedal to the metal. And I would say that, and when I say use your emotions, you almost always want to go opposite the emotions. So I know there's a lot of this rally's been so powerful and so good, and I would guess that most people haven't participated as much as they feel they quote unquote should have. Even myself, I feel like, if you told me Nasdaq's going to rally 10% in 4 weeks beforehand, I'd say, well, then I'll probably be up 30% with the types of stocks that we have. And so you have to fight that urge to don't compound one mistake with another. So, the mistake was not being, if your mistake was not being as fully invested as you would have liked, don't compound it by chasing here. And I would say that I think the market, the narrative in the market as we sit here is that it needs to kind of pull back and go sideways. I think that's the most common narrative amongst traders. So my feeling is it's going to do one or the other. It's going to fail and come down hard for a nasty shakeout, or it's just going to keep going because a lot of people are looking for a quiet kind of sideways, what do they all call it? A natural pullback or a healthy consolidation is the word they use, or the phrase they use. That's my favorite, a healthy consolidation. And so it's healthy that you're losing money off the top is the what people will think. So I just don't see a healthy consolidation here. I think it's going to do one or the other. It's just going to keep going, or maybe it's not a healthy consolidation. It's a nasty consolidation that shakes the tree a little bit. And probably, because of the calendar and where we are you're not going to get that until 2024. So like I said previously, I'm excited about fast forwarding to 2024. Next week is not Christmas week. We have a couple more weeks here. So probably one more video before the year is up. I'll probably be back next year. Apologize for the interruptions in the video. Here's the contact information. marksmith@investors.com, 800-424-9033. Have a great weekend, everybody, and we will see you next week. Bye-bye.